Welcome to Investor TV. I'm Michael Switow. Perhaps no metal is more important to the energy transition and indeed to our modern way of life than copper. It's used in electric vehicles, solar panels, wind turbines, and well, just about anything digital or electric. But are we producing enough of the red metal to keep up with demand? And is copper a good investment, particularly at its current levels? Joining me now to help answer these questions, we have a great panel for you. They know the copper industry inside and out. Giulio Bonifacio is the executive chair of Alta Copper. Marcus Harden is the president of Gladiator Metals. Sandeep Singh is the chief executive of Western Copper and Gold. And John Feneck is an analyst investor and the president of Feneck Consulting. Gentlemen, welcome to the show.
Thank you very much, Michael.
Thanks, Michael, for having us.
Now, over the next hour, we're going to explore the macro picture as well as some of the intricacies of the copper exploration industry, all with a view to see how you, our viewers, can profit from it. I want to start with the demand side of the equation. John, could you spell out the bull narrative for us? What do you see as the top three factors fueling copper demand?
Well, obviously electrification, population growth, and just lack of supply. We're dealing with a supply-demand imbalance in copper. As I talk to traders at exchanges, there's still a persistent lack of supply, right? So with constant demand or just, keeping the demand as it is, we're still going to be in a serious deficit as we progress. Barron's put out a piece in January which discussed the fact that copper was more needed, through global economies, but also to their credit, what they were saying that you just can't, flip a switch and turn on production, which is really the problem that I see, because so many companies are years away from production, yet demand is, running hot.
Yeah, definitely. On the demand side of the equation, EVs and AI are definitely a big part of it. One stat I saw that really struck me is that electric vehicles require 3 times as much copper as a conventional car. And then with the AI boom, data centers need copper to distribute power, provide connectivity, run cooling systems, and then throw China into the mix. Their latest stimulus measures could boost demand there for copper in the world's second largest economy. And John, as you mentioned, while demand is really strong, there have been supply constraints. Just within the last year or two, output from China, the world's biggest producer, is falling. It's down more than 10% over the past year. Panama has shuttered a big mine following protests about a project's environmental impact. Sandeep, in your view, is there enough supply coming online to meet this rising demand?
Well, the short answer is no. I think, as John pointed out, the demand is actually quite broad. Like there's not kind of one single thesis that you need to believe in to be a believer in copper, or whether it's continued energy transition, AI, data storage, all that is copper based. But just the normal infrastructure, the electrical grid, the Western need to both renew and expand electrical grids, all that is reliant on copper, and you don't need to believe in more than one or one and a half of those kind of major theses to see where the demand's going to come from. On the supply side, again, as John pointed out, these are long-term projects. We as a sector have actually done a pretty good job in the last 4 or 5 years of bringing new supply to market, to meet the last the run in prices, whether it was Ivanhoe Mines coming from nothing to its current production levels. QB2 is almost built, Quellaveco is almost built, Comacao got built, forgetting something, Monteverde is almost finished. Like, that's a meaningful response that the sector has kind of put forward. But if you don't have a shovel in the ground now, it's hard to see where that meaningful increase is going to come from before the beginning of next decade, to be honest. So that's really the challenge. I think the demand is there. I think the challenge is really the supply going forward. That's what's going to cause the biggest pinch point that I can see coming. And sadly, you mentioned one example in Panama. Every year or two, it seems like we cross another country off the list in terms of places where you can justify building these projects. And copper, unlike many metals and like gold, for instance, these are multi-billion-dollar, multi-decade investment decisions. And if you're sitting in the boardroom of a Western-focused or ESG-focused company, the places where you can justify making those decisions and feel safe about it are tougher and tougher to see.
Yeah, there's a geopolitical aspect of it for sure. In terms of the macro picture, last month, the U.S. Federal Reserve cut interest rates for the first time in 4 years. It's expected to make further cuts before year's end. Marcus, what impact do you expect this to have on your business? Will it help potentially lower costs or increase demand further?
I think it will help to increase demand. I think the Federal Reserve has sort of set the mood music for global stimulus. We've seen other central banks following as well. And I also think that part of that is also the recent Chinese stimulus. All of this is going to feed through into an atmosphere of growth, which I think will help increase demand for commodities. And I think in particular copper, for many of the reasons that we've already talked about. I guess from our business perspective and on a more measurable scale, Gladiator Metals is a exploration company, so more at the early stage, looking to put resources onto the books. And I think, with those cuts in interest rates, that'll start to move money to perhaps the more high risk, high reward areas as investors start to look for similar returns. I think commodities and exploration for commodities and development will be a beneficiary of that as well.
There have been a spate of mergers and acquisitions in the copper space this year. In fact, some people in the industry are calling it buy over build, saying it's better to buy a mine than start a new one. Take BHP, for example. It's buying a mine in South America. It's making a big bet on South Australia's copper industry with a $6 billion acquisition of Oz Minerals. Of course, it tried and failed to buy Anglo American. As I said, some analysts have remarked that it seems the big players would rather buy a copper company than invest in greenfield projects. Giulio, is this trend potentially good news for junior miners like your company?
I think by all means, frankly, I mean, clearly we haven't seen the level of activity in the copper M&A space for a period of time. That is starting to move in the right direction. There's very few opportunities to acquire copper projects in the production phase, especially if you look at the earlier discussion on what is occurring on the demand side with respects to copper prices. There's a structural deficit in copper. You look at the EV thematic, you look at the digital needs, infrastructure rebuild. So if you look over the next 10 to 15 years, how many of these groups that have projects that are in production are willing to sell? I think what you're going to see is more acquisitions in the downstream areas such as development. And one of the areas that I've always focused in on, and one of the reasons that I became initially an investor of Alta Copper and stepped in a more active role, and more recently moved into the chief executive officer role, is there's very few projects. I mean, if you look through the lens, that are less than 5 years away from being shovel ready. And when I say shovel ready, how many projects have a significant resource, well enough advanced, the ability to move to feasibility, but also the ability to go through a permitting cycle. And I think you can see certain jurisdictions such as Peru, in this instance for our project, that's opening up in a very, very significant way. So geopolitical jurisdiction, none of this is simple. There's a process you have to go through, but in our instance with Peru, there's been a welcome change. But when I look at copper projects, and I have been in the copper space for the last 20 plus years, how many are actually within a time frame that's achievable? And I think you'll start to see a little bit more activity that'll come downstream. You'll see more development companies like Alta Copper, like some on the panel today, subject to those type of acquisitions and M&A activity. And I think that's just starting. We've seen a volatile marketplace for a period of time here, but copper prices are doing what they're doing. People are very much convinced that, in the next 10, 15 years, there's going to be a great need. BHP just put something out that looked very, very interesting as well in terms of their views on the demand side. So, in answer to your question, by all means, I think it's going to be a very exciting space, and we're going to see a lot of activity as we move forward in the coming months and years.
Marcus, to what extent does buy over build factor into your business strategy? Do you think a big company might be tempted to buy you outright?
Yeah, I think I would echo a lot of what Giulio just said. I think besides creating a lot more interest in the copper space with these mergers and acquisitions, Gladiator Metals a bit earlier on in the process. We're looking to establish our first resources in 2025, and that would sort of be I mean, from our perspective, that would probably be the earliest point where other companies looking to acquire Gladiator metals will be looking to measure us from. So I think we're probably pretty early on that. However, echoing a few of the sentiments of Sandeep and Giulio, it's good copper deposits with high-grade resources in accessible areas with social license to build are a pretty rare commodity. There's not a lot of them sort of come to market year on year, and I think Gladiator metals would certainly be looking to build on that sentiment, and that's certainly part of the strategy, putting those resources together within that broader framework.
Sandeep,
Yeah, sorry.
Yeah, Sandeep, go ahead. Jump in. I got a question for you, but go ahead.
Please. Look, the one thing I just want to add to what Giulio and Marcus said is, yes, the focus has clearly been on buy versus build for the big companies. And we've seen that. We've seen them put puzzle pieces together and then get bigger as a result. Lo and behold, they then need bigger and bigger projects to move the needle for them. But that doesn't create more copper, right? It doesn't solve the problem. It just moves the existing copper around. In some ways, it actually creates more of a logjam, because even a big company really only takes on one big project at a time typically. And so if you put two companies together, all of a sudden two projects that might have been tracking in parallel are now being done sequentially. So, I think it's been easier, and it's fair enough that people have gone towards production first. But I think we're running out of things that you can put together, running out of puzzle pieces that are available to Giulio's point and Marcus's point. So eventually that focus then has to turn back to, where's my pipeline? What can I actually bring on? And all of it, every credible copper project that you can think of in a good jurisdiction or even in a bad jurisdiction needs to be brought to market here in the next wave. And we need to find a whole bunch more that we haven't got even a sniff of. Hopefully,
I'm curious though, if I can just ask you a question here. When you look at what the majors are paying to acquire these projects, these brownfield projects, what do you think it says, Sandeep, about how they're valuing copper going forward? What does it say about their price expectations?
Yeah, look, that's a really good question. I think if you look, and I don't want to single anybody out, but if you look at the recent announcements, you highlighted a couple of them, and you just do basic math as to what the implied copper price is to get reasonable valuations, I think it's well north of some people's expectations. I don't think people are pricing in less than $5 long term in some of those transactions, in some cases even more. So I think it was fair that with China a little bit on its back foot, the copper price came down this summer from $5 to $4. Perhaps that move up was a little bit premature, but if you span out a little bit longer, I think the outlook looks tremendous, and I think the biggest companies, the smartest people in the room, as it relates to copper, are telling you what they believe through their multi-billion-dollar actions.
Okay,
Michael,
so that's part of the book.
Michael, if I could add, I think that a key point is that when you look at many copper projects that have scale and size, and you look at the amount of capital that's required, realistically, it's going to be the large caps, the majors that look into development opportunities, such as many on this panel here, but appreciate that companies, such as Alta, for example, you really need that team that's got the ability to execute on the project build, but also the balance sheet. And we've seen many failed situations take place over a number of years with the junior endeavors to try and build out their projects. That's just not the way it should happen on a go-forward basis. So, the majors and the large cap copper companies, the BHPs, the Rios, you go through that list, they will definitely look at buying the producing situations first and foremost, but then they'll go downstream and they'll look at a time frame and they'll go, okay, is this something that comes on stream in the next 5 to 10 years? And for example, in our instance, we've got a major company behind it that's a $50-60 billion iron ore company. They're moving into the green space in a very significant way. But in speaking to them, one of their key criteria for many of these projects is it something that we can take forward within a window of opportunity? Because we do see the copper space moving in a very significant positive way in the coming years. So I think, producing situation by all means, advanced development by all means, further to Marcus's comment on his project, discovery type opportunities that have significant resources, they all fit into the various baskets of these companies. We want production, we want near-term production, we also want to put in place a resource of meaningful size. So I think you'll see, in my estimation, at the very least, a lot more activity, and it's been pretty quiet. You look at pre-global financial crisis, you look at post-global financial crises. On average, you saw acquisitions take place, and I'm not saying this is a measure, but you'd look at projects get acquired at 5 to 10 cents per pound. Now that's not how you should measure these things, but if you take that multiple and you apply that, that gives you a good range of where this potentially can get to. And I think it'll be rather exciting to see what takes place here in the coming years.
Well, you mentioned the money that the big companies are putting into projects, and there's a flip side to buy or build. In some sense, it seems that big companies may be putting less money in for exploration. I mean, it's not clear cut. BHP has nearly tripled its greenfield spending over the past few years, but that level is still well below what it was a decade ago. John, what impact do you think this is having on the sector in general? Are junior miners receiving the equity they need to keep on exploring?
Absolutely not. In fact, I was just interviewed on Kitco last month. It went live yesterday, October 3. And the title talks about this, that juniors are cash strapped, and that needs to change in a positive way. At Beaver Creek last month, I met with 28 CEOs in 3 days, and the theme amongst at least 20 of them was that this is the best conference they've seen for companies that are larger than them coming to them and saying, hey, we need to get in the boardroom. We need to learn more about your project, which is really positive. I don't know why it's taken this long. It's amazing to me, the delays in our sector in general. It doesn't matter if it's copper, gold, or silver. The majors are super slow to move, and I think that's ridiculous, especially when you got to have someone on your team that can look at a chart, right? And in April of 2020, we all agree we had a V-shaped recovery in copper. So it's been 4.5 years, people, right? Like, it's not been like 4 months. So for them to take as long as they have is going to just cost them more.
A reminder for everyone who's participating in today's discussion, this is also an opportunity for you to ask questions to the panelists. There's a Q&A button on your screen. If you're on a PC, that button is at the bottom center of the screen. If you're on a tablet, it's located near the top right. So please do submit your questions. I want to return to what M&A may mean for copper prices. Goldman Sachs has calculated that this year's deals have been struck at an average price of more than $25,000 US dollars a ton. That's about 2 to 3 times the current levels. John, is there a risk that copper could get to be too expensive and companies will just simply switch to something cheaper like aluminum?
That's a good question. Probably better answered by the 3 gentlemen here in terms of replacements. But for me, right now, we're recording this at $92.30 a metric ton, right? So if they're at 25K, I mean, you can do the math, right? This is a ridiculous move that they're estimating for the copper price. I don't think it's that high, frankly. I think they recently, in September, took their estimate down a bit. But you look at Morgan Stanley, which is the largest broker-dealer out there, right? I mean, another behemoth in the financial services space, and they're calling for about 15,000 a metric ton by next year. So that would imply over a 50% move in the copper price. If you don't look at metric tons, look at per pound, if that's what you prefer. We're at $4.56 a pound as we record this, right? As Sandeep pointed out, we rallied to 5, we pulled back. 5 is sort of a big round number in the sand. And then we went all the way back to the low 4s, and now we're kind of in the middle, right? But I really feel we're making another run at $5 a pound next year. So that's why we're buying copper juniors and developers right now. A lot of the majors have run. It doesn't mean we are opposed to buying them, but we're seeing such value in companies like the ones presenting today.
Sandeep, if you want to jump in here, what do you think is the threshold price at which businesses may make the switch away from copper?
Yeah, look, there's always a little bit of that, but I think it's really just at the margin. It used to be conventional wisdom used to be when the copper price is 3 times the aluminum price, you start to see substitution. Now people are saying it's 3.5 to 4. That's kind of in the range we're at now. And I still don't think you're seeing that substitution in any kind of significant way. So I think there's just a lot of infrastructure that is built up to receive, copper concentrate, produce copper in a certain manner, and then the downstream that follows from it. So I don't think we see as much as people believe. Obviously, if they decouple even further, then you might see some at the margin. But I certainly don't see it as being a massive kind of maybe it's a little bit of an impediment to all those positives we talked about on the demand side, but not really something we in the copper space, I think, lose a lot of sleep over.
Okay, good to hear. I mean, when I was looking into this, I also noted that aluminum, it's not as conductive as copper, so the cables have to be thicker to transmit the same amount of electricity. So that might be okay for overhead power lines, but when space is at a premium, copper wins out. And aluminum also has a reputation for being less safe. All right,
Michael,
we're gonna
Michael, if I could add just briefly, and I apologize for the interruption, but I think clearly copper is a commodity that will be in need on a go-forward basis. There's going to be an inflection point, of course, but by that point in time, some of the projections on copper price, I mean, that likely takes place over the coming, 2-3 year period. But by that point in time, any group, major or otherwise, that's moving forward in a copper project is going to have significant margins, so the returns will justify themselves. Copper price will not drop much below certain thresholds. Will there be an inflection point? Will there be a conversion over to certain other commodities? Possibly, but I think, quite frankly, in this instance, all the companies on this panel and others in this space will benefit greatly from it, because the margins in themselves, I mean, you look at many projects. How many projects that make an adequate return at $3 copper, $4 copper, $5 copper? What's the leverage on those commodity prices relative to the respective projects? I think it's just going to create a fantastic opportunity for many developers and exploration companies as well. So I think there's an opportunity in the next number of years to see that take place and unfold.
All right, well, you've just given me an inway into my next question, which is I want to take a moment to get to know the panelist companies better, a bit better. Alta Copper, your company, is focused on a big project in the Andes Mountains of Peru. Gladiator Metals and Western Copper and Gold, they're both active in Canada's Yukon. So, gentlemen, I'm going to give each of you 90 seconds to fill our viewers in on your company's business. Marcus, you're up first. Go.
No, great. Gladiator Metals is a TSX listed company. We've been running for about 18 months, and our sole focus is the Whitehorse Copper Belt in the Yukon, which is located about 30 kilometers from the city of Whitehorse. It's a past producing district. It produced from 1967 to 1982 on a fairly limited scale. It was mined by Hudbay. They produced around 10.5 million tons at 1.5% copper and 1 gram a ton gold, so fairly high grade, and a lot of that was from open pits, so near surface. Since in the 40 years since, actually, the project has been pretty much dormant and fragmented. Gladiator Metals sort of put it together with local landholders, and it's really the first time the area's been explored by modern techniques. When we put the project back together, we were pretty thrilled to find that there were existing reserves and resources left over by Hudbay when they closed down. They closed down due to a low prevailing copper price environment, not because they ran out of mineralization. And we're using those sort of advanced projects with near-term resource potential to build our resource portfolio off. We're looking to put our first resources on the books in 2025. I think our standout difference is that we'll be trying to maintain that grade of 1.5% as much as possible, and so be on the higher end of grade for projects worldwide that are looking to come into production. We're also is that my 90 seconds? Is it, Michael?
I think it was, unfortunately. We'll come back to you. Let's stick with copper. Let's stick with Canada. Sandeep, tell us about Western Copper and Gold.
Sure. Western Copper and Gold is listed in Toronto and New York under the ticker WRN. As you can see, we are pushing forward the Casino Copper Gold project in the Yukon. It's a feasibility stage project. It's quite current. We put that feasibility out in 2022. It's a long life. By that, I mean 27 years of mine life based on 1/3 of our overall resource. We have quick payback through a high-grade core. Overall, our grade is good, and we have a very low strip ratio that's massively beneficial in an big earth-moving operation. Within that, we have a high-grade core that leads to about 3.5-year payback using conservative prices of $3.60 copper and $1,700 gold. It's low elevation on a relative basis, clean metallurgy in a stable jurisdiction, obviously in Canada. So a lot of positive attributes. It's solicited endorsements from Rio Tinto and Mitsubishi. Rio Tinto's invested 5 separate times. Mitsubishi, as far as we know, Mitsubishi Materials, first and only time they've invested in the junior equity of a company. In aggregate, they've put in $60 million into the company and are great partners. And as a result, we're well funded. We had 77 million Canadian in the bank at the end of June, which gives us plenty of runway, years of runway to de-risk and unlock value through the permitting phase, which is what we're currently tackling.
Thank you. Giulio, tell us about Alta Copper.
Thank you, Michael. Frankly, it drew my attention years back as an investor. It's a very large resource. Most of it's been measured, indicated. There's been previous pre-feasibility work done on it. We've recently come out with a preliminary economic assessment. If you look at the global copper, gold, and silver, most of it's an M&I. We sit in at about 16 billion pounds, which is real significant. Last drilled in 2013. A lot more upside to it. It is a project that we can bring on within the next 5 years. When I say bring on, advance it, de-risk it, go through the permitting cycle. We've seen a real welcome change in Peru. That'll help us as we move forward. But when you speak to leverage on copper price, the most recent study that we did is a preliminary economic assessment, building off the previous feasibility work that we've done and a wealth of studies. Every 25-cent increase in the price of copper increases our after-tax NPV by $425 million. So there's a lot of leverage. It's got size. Strip ratio is very modest. The report we put out is very recent. Capital intensity is at the right end of the curve. So I would welcome prospective investors and folks, participating on this show to look at our PowerPoint presentation, and you'll see that there's just a real opportunity here with the existing resource we have, but the blue sky opportunity without fail. You'll see the company move forward on a drill permit and start drilling at the beginning of next year is our current target. If anything, there's much to be chased after in terms of opportunity. If you look at it historically, 32 of 45 drill holes bottom in mineralization, and with porphyries, there's usually a cluster. And in this instance, we've got 3 different opportunities: the primary deposit, Cañarico Norte, Sur, Verde Verde. So I think there's just a fantastic opportunity, and I, without a doubt, being in the copper space and 2 previous copper companies, like this space a lot, and I think prospects look very, very positive for Alta Copper.
John, when you invest in a mining exploration company, do you buy and hold, or what sort of timeline do you look at?
Well, from my perspective, I will be very clear. I think if you look at what the market's done over the last period of time, these things usually take you a bit longer than you'd like, but I think the cycle's upon us, and so I think you'll see probably a hold period that's a lot longer than one might think initially to go through a process, but eventually you'll see the opportunities and the value proposition take place and take hold.
Thank you. John, as an investor, what about you? Do you buy and hold?
It really depends on the individual project, Michael, as well as news flow. We're constantly talking to CEOs. As I pointed out last month at the conference, we met with 28 scheduled CEOs and probably another 10 on the periphery in 3 days. So I always try to, since 2008, I've been on the phone with CEOs building my Rolodex so that when we get to periods of time like this in the cycle where things are running hot, at ridiculous prices, it's easy as a value investor like ourselves to buy stuff. When things get more elevated, like let's say gold, for example, right now, I'm getting more. My questions become more difficult for those gold companies because I want to know, how are they going to create value and separate themselves and maybe get some type of deal done. As you saw with Cisco recently, that was a good deal, but there's been a lot of bad deals in the sector, in my opinion. And investors, just speaking for investors in general, I mean, I only have a couple of hundred clients, but I've got thousands of followers, and I constantly hear the same theme, which is we don't want cheap takeouts, right? Which also is referred to as a take under. I would argue that we see that a lot. I think the Gatos deal recently, I see a lot of positive commentary from my peers. I wouldn't be interested if I was a Gatos shareholder in a 16 or 17% return after holding it, right? I mean, it's just frustrating. We're looking for people, and just talking on this particular panel. I've talked to Giulio a number of times over the last 4 years, and he gets it, right? He's tied up 33% of his float with one company, and he and the management have tied up a lot of other portions of the capital structure, right? So when you look at that prevents a take under. Giulio is in charge, and that's what we look for in a lot of the companies we buy. We want to see at least 30% of the float in good hands. Sandeep just pointed out that he's got great partners in Rio and Mitsubishi, and those are the kind of things you have to look for as an investor, because otherwise you're going to see companies like Marathon or Gatos just sell too cheaply.
So John, I got another question for you. This is coming from the chat here. It comes from Kevin Dorsey. He asks if there's any emerging copper projects or initiatives that investors should really keep an eye on, maybe something that governments are pushing.
That's for me?
That's for you, yeah.
It's hard tracking 300 companies to talk specifically about projects. I kind of remember stocks more than projects as an equity manager. So, when I look at the copper space right now, the most exciting drill results that have taken me by surprise this year have come from Power Nickel, believe it or not, PNPNF in the States, PNPN in Canada. Terry's a great leader. He's really pro mining. The stock was in a channel for many, many months, if you look at the 3-year chart, and it broke out in April on the fact that they were not only a nickel company, but they have a polymetallic deposit now. And a lot of their big hits have been in copper, right? So they've made adjustments. They financed into that strength, which financing is part of the game. Not everyone is as lucky as Sandeep to have 77 million in the bank, right? Like, there's a lot of juniors out there that need cash, and you have to take advantage of price increases to cash up in good times. And that's what Terry did. He attracted Rob McEwen to put a second investment in, who's a billionaire. He attracted Robert Friedland from Ivanhoe to put money into the company. These are huge names in our sector. So those are the kind of things that we look for.
I want to turn to operating costs now. Their operating costs are rising across the industry. This is due in part to inflation. Energy bills, for example, are significantly higher. But rising costs are also a result of the fact that many of the easiest sources of new metals are already mined. And miners and explorers like yourself have to dig deeper or go into more difficult terrains to extract the same amount of metal. Giulio, are rising costs impacting your work in Peru?
I think it'll impact work across the board with respect to all projects. I think when you look at the initial costs and you look at sustaining costs to keep these projects in play and create margin, I always look at all-in sustaining costs, and that's why I think if you look at that on any project set of economics, you'll get a good sense of the type of returns. But I think there's always going to be an escalation. I think when you look at studies that have been put out a year or 2 years back, there's going to be a need to update those studies appropriately to reflect the current cost, and that margin starts to narrow. But back to the earlier part of the discussion, copper price itself seems to be moving in the right direction. So, as long as you've got an adequate margin, you'll get the adequate returns. But I have no doubt in my mind anyway that you'll see escalating prices across the board. But I would suggest that one should look at not just the C1 cost, you should look at all-in sustaining costs, because that drives the ultimate cash flow payback and returns on a go-forward basis.
Marcus, to what extent are you grappling with higher exploration or operational costs in the Yukon?
As the exploration costs, we've been able to maintain a fairly low all-in cost for drilling, rather. That's largely to do with our location, because we're only 30 kilometers from Whitehorse. There's no need for a camp or any other infrastructure developments, because it's been a previously operating district. But I think, to come back to what Giulio was saying, that's something we're conscious of going forward, and it was one of the reasons why we actually liked the project. As a past producer, it's got access routes throughout the property. We've got hydropower pretty much on the property, and we've got a city in a mining focused territory just on our doorstep as well. So we've got skills and labour available, and we think we'd be competitive to compete for those skills, given that people will be able to go home to their families at the end of the day, rather than flying in and flying out to other projects.
All right, so it sounds like you're managing your costs. Now, after copper ore is mined, it's crushed, ground, subjected flotation and other processes to remove waste materials. Then the concentrate is typically sent to smelters to refine it further and to extract the pure copper metal. Sandeep, to what extent is there tightness in this market? Are treatment charges rising?
No, they're falling. They're negative in some cases.
Wow.
You're right. I mean, look, there has been, and you saw that with the copper price falling. There's a lot of copper around, or there's sufficient copper around, or else you wouldn't have seen that drop in copper price cathode wise. But concentrate is very, very tight. And you used to say, the rule of thumb was treatment charges were $80 a ton Now we're seeing companies locking in negative $20 a ton until the end of next year in China. So, essentially smelters paying for the privilege to treat your concentrate. So that's a wonky world we're living in, especially high quality concentrate, stuff without impurities that you can use to blend others and make them profitable. We're fortunate to have a very clean metallurgical concentrate, or two, frankly, to ultimately bring to market in the future. And that's one of the reasons Mitsubishi Materials is as keen on our project as they are. But yeah, the concentrate market is tight. We're also seeing at the same time, we've seen smelters built in Indonesia to keep that concentrate from Grasberg in country. India, the Adani Group's just built a new smelter that's coming on right now. In the Middle East, they're trying to take a lot of their oil and gas money and reallocate it to energy transition materials and metals and some of the downstream processing. They're trying to put some of those dollars to work to bring back downstream processing to Saudi Arabia, for instance. So at the same time as we're experiencing tightness for concentrate, and it's hard to see where future supply is going to come from, we're seeing more countries saying, look, we want to onshore our own supply of copper. So it's going to be a really interesting dynamic unless you can secure that concentrate on an offtake basis for a long term. I think that spot market is going to be quite hairy for a while.
Now, I've read that some miners say that copper prices need to top $11,000 a ton. And right now, as John was saying earlier, it's less than 10,000. So they're saying it needs to be 11,000 just to recoup the cost of capital on new projects. So I'm wondering, what does the price of copper need to be for each of your projects to be successful? Let's do a quick round on this. Giulio?
Well, as I noted earlier, every 25-cent increase in the price of copper creates significant leverage. But one of the biggest reasons that I became an investor in Alta Copper, previously called Cadente Copper, was the fact that the margins were fantastic and you could actually turn a profit at even $3 copper. Now, these numbers will continually change. But if you look at the margins, you look at the low strip ratio, you look at our recently published preliminary economic assessment, which by any measure is very advanced when you compare it to certain other studies that have been put out there. There's an adequate margin in here that drives a lot of interest. And also why we have this company called Fortescue Metals that's got a 30% plus interest. They're very, very keen on copper. So I do not think that you see copper prices fall below $4. I think 9,000 to 10,000 to $15,000 per ton is appropriate. But with that said, we're not in the game to pick commodity prices. We're in the game to define and mitigate risk. And so if you've got a project that can be funded to production and you can execute, I think that's a key component that we have with respect to our project.
Marcus, what about you? What does the price of copper need to be for your project to be successful?
We're still at a very early stage, so we're just defining resources. But I think our company, we're looking for a sort of a smaller deposit, roughly around 40 million tons, with corresponding smaller capital outlay costs at the start. We would also look to maintain that historical grade of the project around 1.5%, with credits on top of that. And that's sort of what's feeding through from the drilling as well at this stage. And all of that makes it a bit more forgiving to fluctuations in the copper price. Higher grade obviously allows for a little bit more profitability, and smaller scale capital outlay at the start means we should be able to pay things back a little bit quicker. So, and that's coupled with our infrastructure advantages. The fact that there already is power to site, there already are haul roads on site. A lot of that should help to keep the capital intensity down.
Sandeep, what about you?
Yeah, look, similar to what Giulio said, we're fortunate that, we have a project that's at a feasibility level. So stringent economics, technical work into those economics. And our project pays back, even using 360 copper, it pays back within 3.3 years. And then you take from that the incredible leverage that we have to rising copper and gold prices, and it only gets better from there. So to have the flexibility and the ability to say, look, we have an economic project, a highly economic project at long-term prices well below what anyone is currently forecasting or pricing into their thinking, and then have all the leverage on top of that. That's pretty special, and obviously that's what's attracted some of the bigger companies to our project. We think we have a senior scale project. People throw around world-class a little bit too cavalierly, but I think we have something that's globally significant.
Okay. So I see a question in the chat, and I just want to say to Zil Funky that we're going to get to in a little bit, because you're asking how retail investors can best invest in copper. So we will get to that. But first, Sandeep, I got another quick question for you, which is how would you quantify the infrastructure investment needed to bring copper to market?
Quantify is a hard one, but I'll qualify it. Look, that is a huge part of the story. And I was going to intervene earlier when I can't remember whose question it was, but it was something about what countries could do with projects and whatnot. I think the biggest thing we're seeing is there are countries that are going the wrong way. There are countries that, when push comes to shove, are taking pieces off projects or changing the rules of the game or making it harder to be in those countries. And then there are jurisdictions that are leading the way in terms of providing the infrastructure that can help unlock some of these projects. These big projects in particular don't tend to be in your backyard. Marcus is fortunate to be exploring somewhere that has those types of benefits. But if you're talking about the really big projects, the things that the senior companies are going to look to build, they tend to be in tougher places from an infrastructure perspective. So anything that a jurisdiction can do to ease that burden on an individual project is huge. In our case, when you look back at the casino project in the Yukon maybe a decade ago, it was infrastructure challenged. In the last 4 years, the tailwind for critical minerals is such that we've had a scenario where the federal government has committed $130 million to help with our road, do most of the road, spent the first $30 million of it. The territorial government has committed dollars to a port in America, in Skagway, to secure concentrate shipments. And just 2 weeks ago, the federal government committed $40 million to the Yukon's initiative to tie their grid, which is starved for power, to the BC hydro grid, move that concept forward to a pre-feasibility level. So in total, circa $200 million of infrastructure improvements that we are either the direct or the highly indirect beneficiary of. So I think when you see scenarios like that, it shows you that there are jurisdictions that are trying to do the right things and help these big projects that need infrastructure come to market. And it's because of the tailwind that we all are benefiting from a critical minerals perspective. So I think that's, there's wherever you're in a scenario where that's to your favor, I think that's massively important. When you've got all those impediments and you're having to tackle them alone, that obviously makes things harder.
All right, thank you for that. We got a question here in the chat from Murali. Says that so many copper projects face permitting delays and local opposition due to environmental concerns. Murali is wondering how your companies are working with local communities and regulators to ensure project success while maintaining social and environmental responsibility. Who'd like to jump in and take that one?
Well, I can start. First off, I think that's an excellent question. That's a huge part of what we're all dealing with. Permitting has gotten longer in the mining sector, no question. Permitting in Canada in particular is extensive, but it should be. We are trying to build significant projects. They do have environmental impacts, they have social impacts, they also have a ton of benefits. So I think we have to, as a sector, get that mix, that balance right. We have to communicate it to our affected counterparties and our partners and our regulators and our government. And that's the only way you can build and then maintain that social license every day. We're fortunate that we have been in the Yukon for an awfully long time. My predecessors have, and have built, the right social license as a developer. Now, if you take that social license and turn it into what you need to build a mine, that's another layer beyond. And we work with our affected First Nations and with our regulators on a daily and weekly basis and make sure that they're aware of everything we're doing and why we're doing it. We receive their feedback. We don't always agree with it. Generally, we do. And we try to incorporate it as we go, such that when we submit our environmental and socioeconomic assessment, which is the big next kind of catalyst for us, it has as much of that thinking it's taken into account as much of that thinking as possible. And what we're doing and proposing to do is not a surprise to anyone. So it's an evolving thing. It's a day-to-day, work product. It's not something you can kind of turn on and off like a light switch. Or sorry, I should say, you can't turn it on like a light switch. You can certainly turn it off like a light switch. If you do the wrong things, you can lose that social license pretty quickly. So it's near and dear to us, and we make sure that we continue to do the right things and be reflected as such.
Giulio, I'll come over to you in just a moment. But first, I just want to share, I was reading about a Chinese company, Zijing Mining, And about 12, 14 years ago, they had a major spillage of acid into the water system where they were mining, killed off, I think, enough fish to feed more than 70,000 people for a year. That company now marks that day every single year to kind of show, well, to remember what happened that was bad and to show their commitment that it won't happen again. And they say that, okay, look, we were an early stage company at that point. We've learned our lesson, but it was still an environmental disaster. So clearly, I mean, there are a lot of things that can go wrong. Giulio, what are the steps that you take, right, in Peru at Alta Copper to ensure that the right safeguards are in place and that you respect the environment and the community?
Yeah, but if I could go back one step in terms of social license and community, I think, I have permitted one of the largest copper projects in the American Southwest. So from my perspective, process is no different. You're dealing with different stakeholders. You're dealing in certain instances with indigenous. In our case, that would be the case. But demonstrating to the community that you're a responsible stakeholder within the community and that you've got the environment first and foremost in your mind is kind of a key point. And so what you've seen over the last number of years is tailings disasters, but now there's a push appropriately towards dry stack tailings. Now that adds to your capital cost component, but that mitigates some of the risks that we've seen take place. But communication, being involved with the community, being actively proactive with them in terms of explaining to them exactly what you need to do. So for example, in our case, in Peru, you have to file an environmental statement to get a drill permit. You have to have a community assembly and a meeting to explain everything to them appropriately. So further to Sandeep's point, ongoing continual discussion with the stakeholders, but making it very, very clear that you're doing these things in a responsible fashion. So, the one example I put forth is instead of wet tails, which is probably what occurred in that instance that you made reference to, and I'm not familiar with the company per se, but moving to dry stack, being very responsible about some of the issues and concerns that we've seen over the last number of years is kind of a key point. And so, having that open lines of communication, demonstrating that you're a responsible community member, appreciating that, hey, they're a big part of what you're trying to do. Now, I will say to close off, that is something that you need to do regardless of jurisdiction. If you're in the American Southwest, if you're in the Yukon, if you're in British Columbia, no matter where you're located, you need to continue to do these sorts of things. And as companies do that and demonstrate that they're responsible in terms of that they need to do as a company and responsible to the stakeholders, I think you'll have, certain projects advance accordingly. But timeline on permitting, there's no doubt it's complex, it's timely. You need to assess it. You need to manage that process. You need to move it forward appropriately. But I think if it's done appropriately, you'll see certain projects such as ours and obviously Sandeep's move forward appropriately within that permitting timeline, within the targeted timelines that have been put forth.
Thank you. Well said. I want to segue now and share a couple of slides with you all, just to kind of look at the price of copper and how that compares to how some companies are doing. First off, we have a chart here that shows how copper prices have risen since 2020. John, I think you referred to a V-shaped recovery earlier. If we look a little closer, we can see that copper has done better than the Dow, but not as good as the NASDAQ and S&P 500. If we take a look at copper compared to the big miners, well, they've done better than some. You can see it right there in the middle, but not as good as others. So it's kind of interesting to see. I mentioned that company a moment ago, Zijin Mining, when I was looking it up. Its stock up more than 60% over the past year. And then if we look at the junior miners, some of the big ones here, you can see again, well, it's been a mixed bag. A lot of companies, their prices have been lagging as compared to the price of copper. So, John, I'm wondering, what do you think in terms of the value of exploration companies when you look at these numbers, and what would you say to people, who say, how should I invest in copper?
If you go back a slide, Michael, to where you were comparing copper to miners, yeah, there you go. Copper versus miners, please. Yeah. So copper is a commodity. It's not a stock. And for that to do as well as it has here on a list of really large stocks is impressive, right? Because you're going to have less risk in any commodity versus the stocks that try to find that commodity. And as I look through this list, a lot of these names, if not all of them, are in the top 20 holdings of COPX, which is the large cap ETF that you can buy as a U.S. investor that encompasses all of these holdings, right? That's sort of like the GDX for gold, which is the largest gold ETF. If you wanted to play copper directly, there's an ETF out there called CPER, which tracks the price of copper. So we own a little bit of CPER. We own some COPX. There you go. And as you can see, the COPX is full of producing copper mines. And that it should be part of someone's portfolio because there's less risk in the larger cap names. But I would argue that the real value right now is in the exploration and development companies in copper because they have a lot more leverage to a move in the price of copper, right? So if we see copper go from the $4.56 a pound price that I mentioned that we're at as we record to $5 plus, a lot of the names that we see presenting today along with the peer group are going to move sharply, in my opinion. So now is the time to be buying these things because if Goldman Sachs and Morgan Stanley are talking about a large move in the copper price over the next 24 months, why wouldn't your portfolio own some juniors?
Okay, so you definitely like the junior miners. I think it's fair to take a moment, look at how copper is doing versus our panelist companies. So we see two of all your stocks are lagging a bit behind the price of copper. Alta, your share price is doing a bit higher. John, again, as someone who's outside the companies, do you see a chance for all of them now to outperform copper as we go forward?
Yeah, I think this is just my opinion, okay? But when I look at anything in the Yukon, it's getting unfairly taken down right now because of what happened with Victoria Gold. So that would probably explain some of the year-to-date underperformance of both Gladiator and Western. I think that's a temporary thing, right? When you have operator error in jurisdictions, investors vote with their dollars in not the most intelligent ways sometimes and just sell on the news. And they don't actually do the work that I do, which is pick up the phone and call CEOs like the three here and ask them, hey, what does this mean to your stock particularly? And it can be a 5-minute phone call, but that's what we do extremely well. I've been doing this for 16 years through phone calls, through emails, through conferences. It's extremely time consuming, but it helps our performance immensely. If you go to fennecconsulting.com/performance, I would argue we have a top decile, performance for 3, 5, and 7 years ended June 30th. Our September 30th numbers will be out soon, but we had a great quarter again in the third quarter here. So we're trying to attract investors right now that we can lead through this period of time where there is some doubt about, as Sandeep pointed out, you go from $4 a pound to $5 a pound. Now you're back in the middle. It's frustrating for investors. You need some guidance sometimes to be led into stocks based on your risk tolerance and your goals, right? And your time horizon. So these are things that we help investors with.
All right, so for our panel, what advice would you have for people who are new to copper but thinking about investing in it? Giulio, you want to kick that one off first?
Yes, by all means. I think you look at the context of the capital market, it's been more challenging than what we might be accustomed to. And I think what that's done, though, is it's created some fantastic opportunities, not just in the copper space, but also in the gold and precious metal space. So one needs to be cautious. One needs to, further to John's comments, look at companies that have support from some of the significant groups or funds or investors. And then look at the thematic itself. Like if you truly do believe that copper price is in a range and will withhold this range for a period of time and potentially go a lot higher, once that generalist investor starts to step in, the valuations will change dramatically. We're not, so I look at on a personal investment from a personal investment strategy standpoint, I look at companies that have nothing but leverage. So you can look at Marcus's company and you look at the type of grade, those type of opportunities, because the valuations are relatively low, and I say this respectfully because I would say the same thing about Alta Copper. The leverage that you gain on these type of opportunities is remarkable. And so it's one of the sectors that's been very much unloved for a long, long time. Gold is doing what it's doing. The majors have moved. The small cap, mid cap goals have not. Base metal, you've seen the base metal companies, some of them have moved, some of them have not. The juniors haven't moved at all. We're starved for capital. That will start to change in a very significant way when the marketplace realizes, hey, this is an opportunity that we typically won't see again. You look at the valuations to put in place, and not always to pitch the Alta book, but to replicate the work that Alta Copper has done by way of the founder, Joanne Fries, over the last 20 years, you'd have to probably spend $150 million US. So we're not needing to spend that money. It doesn't become a dilution exercise, yet it's got nothing but leverage. Now, not just in the Alta case, but with many on the panel and other companies as well. Deep discounts because the volatility in the market has driven uneasiness. Victoria Gold is a great example of what occurs when we see these type of things take place. First Quantum with Cobre Panama, you see the uncertainty. Once folks start to realize that it's a space that has been very much unloved, and you start to see investment capital start to flow back in, I think you start seeing the valuations change. So when I look at sectors across the board, because I do invest across the board, I think the opportunity, the leverage in the mining space, not just copper, but other commodities as well, specifically gold and silver, will do exceptionally well. So returns for dollars invested, you're very unlikely to get a multiple of 3 to 5 to 6 times, depending on the circumstance, within a short period of time. You just don't typically see that with respect to certain other companies in the space and other sectors.
Giulio, you mentioned gold and silver as well as copper. So I think I just throw another slide up here showing that copper so far has actually underperformed comparing to gold and silver. So we know they both had really big rallies. I mean, copper's done well. It's at about 26% over the last 12 months. But compare that to 42% for gold, 38% for silver. Marcus, do you see copper catching up?
Yeah, I think I do. I think, to echo a lot of what Giulio was saying, I think copper has been a lag. I think we've all been talking about the broader thematic for copper prices increasing. I think it's a question of when rather than if. And I think there is an opportunity for copper to catch up.
Sandeep, last thoughts from you.
Well, I think it's also just the time frames you use, right? These things don't always move lockstep. They tend to move a bit counter-cyclically, or certainly copper and gold do. So copper was the only thing people cared about for a couple of years. You couldn't catch a bid in gold. Now gold's having a moment. We're quite fortunate, not to make it about us, but I think if you asked anybody out there, pick 2 commodities that you want to be exposed to, that most people would say some version of copper and then gold, or gold and then copper. Silver is obviously more niche-y, but certainly doing well and has a following. So I think we're all chasing the right things. I think back to your earlier question about what do you look for? Obviously, you have to look at the specific projects and make sure they're viable, but you want to make sure that you're not adding on extra risks. There's enough risks in mining to start adding on country risk, geopolitical certainty. No one on this panel provides that. I think the difference between balance sheet risk, treasury risk is also high. The difference between people that have money and can raise it and the people that don't and can't, that's going to be getting further and further apart. I think everybody on this panel has shown the ability to dilute smartly and efficiently and keep moving their projects forward. So I think those are some of the things people should look for. And in the copper space, to be honest, it's such a small list. I mean, it's a very scarce list of names. It's not like you have the plethora of gold names out there that you need to sift through. When you start doing that work, if you put in the work and you start separating viable from less viable, good country risk from less good country risk, you end up with pretty small investment universe. I think we're all in it for different or similar reasons.
John, we don't have a lot of time left, but when you look at this chart, you can see the ups and downs of copper, and you've been in this business for quite a while. Just in the last month or so, copper prices have retracted a bit. I know that we're all, everyone on this panel is bullish about it for the long term, but how do we know that there's not going to be another downturn in the industry?
Question is for who exactly, Michael?
John, please.
Oh, I didn't hear John. Sorry about that. We look at things 1 to 6 to 12 months out, Michael. So this is a helpful chart in terms of looking at history. But right now, things have changed. We're living in a different world since COVID, and commodities are in a bull market, in my opinion. So, this is helpful to kind of show that, $2 is sort of your floor, in my opinion, looking at this chart. But really, it's probably a higher price. If we were to see this all the way through 2024, the chart looks way better. Yeah, I mean, to Giulio's point, the reason we buy much more in copper stocks than the copper commodity is because of leverage. We see companies in the junior space offering 2, 3, 4 times the leverage to the copper price than if I were just to buy this chart.
Fantastic. Thank you all so much. A note to our viewers, please be sure to visit the investorTV website. That is at investor.television-com to sign up for our future panels. We have another one coming up in about 2 weeks on mining in Africa. Gentlemen, thank you all so much for joining us today.
Thank you, Michael.
Thank you, Michael.
Of course. Thanks, Michael.
I'm impressed by the bull story for copper. We've heard how important it is, how the supply is short, and how it takes a lot of time to bring new supply online. You can't just flip a switch. So we've heard some really great examples today from 3 mining exploration companies, as well as from John Feneck of Feneck Consulting. So once again, please do tune in and register for our next panel 2 weeks from now. You've been watching Investor TV. I'm Michael Switow.